morning, everyone, and welcome to Market FataFat. It's a very weak market at hand. We're down 0.7% on the Nifty, 10,662. The global cues as well haven't been all that encouraging. The broader end of the market is where you're seeing real pain. That's the mid-cap index, which has slipped 200 points plus. And pharma sure is the weakest link in trade today, dragged down by Dr. Reddy's, Glenmark and the other constituents. This one is suffering down 4%. But we have a whole host of stocks. What should you be watching out for? What are the top trends? We'll be getting you all that and more over the next 30 minutes. Let's bring on board Kunal Bothra, Swati Hotkar, as well as Mubina Kapasi and Siddharth Bhamre. Well, the first stock on the radar, and that is a stock that has seriously seen a lot of hectic selling pressure, is without a doubt Dr. Reddy's. In fact, you just a short while ago had the note coming out from Jefferies, and the main reason for the stock tanking is the fact that there was a Form 483 issued with 11 observations. These 11 observations include 4 repeat observations, which is repeated from 2015 and 2017, failure to fully investigate, lack of timely unlocking of records, quality control procedures, failure to follow written specifications, and this is a key negative coming in because this plant, which is the Bachupalli plant, by the way, on which the observations have been issued, contributes nearly 30 to 40% of their revenues. Suffering in trade, it has bounced back from the lowest point of the day. Moving on then to another stock from the mid-cap universe, let's pull up AB Fashion, pardon me, Aditya Birla Fashion, which is holding out at 217. Why is this a sell, Kunal?
In fact, Avan, and the stock is trading at a multi-year high. I think 2017-18. The stock has been trading at a very strong upside post that. So in fact, the recommendation for ABFRL is a buy. Since the stock is nearing those breakout levels, targets of 230 and stop loss at 205.
Okay, those levels are actually wrong, what you're seeing on your screen. In fact, Kunal is talking about a buy on Aditya Birla Fashion with a target at 230 and a stop loss at 205. It's a buy recommendation, stand corrected there. But let's move on then and pull up ICICI Securities then. And what exactly, Swati, is your technical assessment with the stock is at 195?
Yes, currently the overall view is cautious. We have seen that the stock is trading at nearly all-time lows. 188 was the low. The resistance is placed at 205, 210 levels. So overall view is definitely cautious. The technicals, looking towards a technical pattern, I believe that it made a new low towards at least 175 to 180 levels. So one can go for a short at the current level, place a stop loss of 205 for immediate target of a 180 to 175 on the downside.
All right, watch out. It's a cautious view on ICICI Sec. Meantime, the big news maker today, Jet Airways, finally a resolution plan, but is this going to solve the long-term inherent problems? That remains to be seen. But what else is going on and what are the details of this resolution plan, Mubina?
Well, for now, it's just a draft plan, but yeah, they are going to be issuing 11.4 crore equity shares to the consortium led by SBI. That essentially means that it's a 50% dilution of the current share market, the share capital, which is at approximately 11.37 crore shares. So Naresh Goyal's stake from 51% will halve to 25%, and it's going to be the SBI-led consortium that's going to be holding a majority stake in Jet Airways. In fact, they're going to be the largest shareholders now, the lenders, and everyone else's stake gets diluted to half of what they currently own. In terms of the third quarter numbers, fourth consecutive quarter wherein they are posting a loss, revenues very, very weak, just a 1% uptick at 6,148 crore rupees. But I think at this point of time, the street is perhaps cheering that at least there's some plan in sight when it comes to saving the beleaguered airline.
All right, that is the key headline when it comes to Jet Airways. Yes, a bit of a relief, and investors are digesting this positively at 235. Moving on then, let's talk about Page Industries, because this one was seeing a bit of consolidation. You had the results as well coming out, but today's move is quite interesting. Siddharth, what are the observations? Down 7%.
Page Industry gave an impression that it was forming a durable bottom around that 22,000 levels, and stock did, move higher. But then in today's trading session, what we are seeing is a complete reversal. In fact, right from the opening tick, Avan, we saw a high of 24,700, and that was an open high. And since then, stock is correcting. Now, look at the volumes. Volumes are highest since last 1.5 months or so, and we are just in first 2.5 hours of the trade. As we speak, the open interest built up is 21 to 22%, which means there is formation of short positions. So this 22,000 support from where stock has bounced back, the way statistics are panned out, I believe this support is getting seriously challenged, and if that goes, then we are talking about further downside.
All right, keep an eye out on that. More downside perhaps on the cards if it breaches some crucial levels. But for now, that support of 22,000 looks like it's getting challenged. So stock number 6 then, and it is Coal India. That one is currently quoting at a level of 220, up in the green by about 1.5%. What exactly, Kunal, have been the trends that we've been seeing on Coal India, and what's your take on the chart?
So, from an average volume of almost 35 lakhs approximately on the NSE, the average volumes in the last 4 days or 5 days has almost been 2.5 or 3 times for Coal India. The stock would try to break some key support levels, which is around those 210 to 15 zone, but then all those support levels are getting held on to. Yesterday also, even though the stock was down 2-3%, you saw a good recovery, and today you're seeing a follow through of price action. So net I believe that this range of 210 to 220 could be a very strong support for Coal India, and if the stock holds on to this range over the next couple of days and the volumes build up as what we've seen in the last 2-3 days, that could be a sign of a strong trend reversal for Coal India. So that could be into short-term traders radar or on a positioning basis per se.
All right, hefty volumes as well over the last few days. Kunal there talking about how the trend has been for Coal India. Moving on then to a heavyweight, and that is ONGC, an impressive show in the third quarter. And that has clearly led to analysts as well turning very bullish on the stock. What's the take in terms of their numbers, Mubina?
Well, yes, for ONGC, it looks like an okay set of numbers. No complaints over there. We have had a revenue growth of 20.4% at 27,694 crore rupees. The profits as well have jumped 65%, and perhaps in all probability due to the fact that they did not have to take in that hefty subsidy burden this quarter, and that's the reason why analysts as well were expecting some sort of a relief for ONGC, despite the fact that crude prices did cool off, and it looks like ONGC has more or less seemed to meet that mark.
All right, that's the take coming in, and clearly a thumbs up coming in from investors and brokerages alike. Moving away from that to an utterly volatile name yesterday, Karur Vysya Bank. The volumes, by the way, was 30 times the 20-day average. The stock really suffered in trade, but Swati, one wonders whether this bounce back is here to stay. What is your call?
No, this bounce back will be not being stayed as such, but overall if we look towards the larger degree, the monthly charts, it shows that the stock has given a breakdown of a head and shoulder pattern neckline, which comes to at around 74 rupees. This week also the stock is down by more than 20%, which indicates a very bearish to the cautious view. So definitely I believe that the stock will come down to at least 60 to 54 rupees, and this selling pressure is likely to be continued in the near term also. So one can go for a short at the current levels or any rise towards 70 rupees. Keep a stop loss of a 74. I am looking for a target for 60 to 54 rupees in a coming few weeks.
All right, that's something to be kept an eye out on, Karur Vysya Bank, and the kind of view is that one should remain cautious. Well, 10,692 on the index. Time for a quick breather. Come right back. The countdown continues. This is Market FataFat. Great to have you back with us. This is Market FataFat. Let's move right on then and keep it with stocks that are in focus in trade today. And another one being Eveready's. Remember, it's been in the news of late with respect to the stake sale. But today, yeah, it's in focus on the back of numbers. The profits came in at 0.2 crores versus about 21 crore rupees. So it was a bit of a dull show there. You had the revenues which were higher by just about 2.5% at 379 crores. The exceptional loss as well came in for the quarter this time around at about 23 crore rupees. Well, we spoke to the management as well on the channel, and while they didn't divulge too many details with respect to the stake sale, they were confident about the overall prospects of the company going forward, saying that fundamentals do remain intact. That's Eveready for you, 201. Moving on then, Glenmark sure is under pressure in trade today. The pharma index as a whole is really battered. So, Siddharth, what are the kind of action, what is the kind of move that we're seeing on the derivatives side?
No, our activity or our commentary is more concentrated on Dr. Reddy's because it gave that sharp intraday fall of 30%. But we are seeing slow and steady grinding by Glenmark, and that stock as we speak is down by 7.5%. Now we are seeing huge formation of short positions over here, and 580 support is now decisively breached on very high volumes. In fact, volumes in first 2.5 hours are highest since last 2 months when it comes to Glenmark. So this is a decisive move below its 200 DMA, which augurs quite negative for the counter.
All right, thanks for running us through that assessment. Fairly negative, of course. Dr. Reddy's is hogging the limelight, but can't ignore that 7% downtick on Glenmark. Let's move on. What's going on in metals then? And Hindalco is continuing to see red on the screen. So let's understand where the stock is headed from 186. Kunal, lucrative option to dip in or stay away?
I think we should look to in fact go even some bit of short at current levels in terms of short-term trading. I think we flagged off the stock start of this week as well, that how from 195, 196 levels the stock looks weak, and there's this downward sloping channel which has strong support around those 180 territories, and the stock could try and test those levels in the next couple of weeks. So we've corrected almost 10 rupees from those levels, and I strongly believe that the stock could even test that 180 mark, which is now the lower end of the channel pattern for Hindalco. I think that is where the next target could be, and that is where I believe a strong bit of supports could probably emerge. But 180 could be a short-term target for Hindalco.
All right, that's the take coming in on Hindalco. Kunal believes that the stock is in a sustained downtrend with more correction. Meantime, the sugar stocks are sure active in trade today. Mubina, walk us through the trigger.
Well, it's quite an important trigger. The government has hiked the minimum selling price of sugar by 2 rupees per kg. So basically from 29 rupees to now 31 rupees. Remember, it's the rate below which mills cannot sell sugar in the open market to whether wholesalers, bulk consumers like beverage and biscuit makers. So not such good news coming in for those guys. But yeah, this is a move essentially which will help clear farmer dues. And it's something that will naturally cause even these sugar mills like Sri Renuka, Balrampur, etc. to heave a sigh of relief, and hence you are seeing an uptick in these stock prices.
All right, yes indeed, this does come as quite a relief for some of these companies. Moving on then, Ashok Leyland was the star in yesterday's session and well deserved on the back of a stellar set of numbers. But what exactly is the trend going forward? Because we clearly aren't seeing the traction continuing. Swati, how does one really approach Ashok Leyland? Investors have been very patient with this one. They were rewarded yesterday, but is that follow-through likely to continue or not?
See, the overall trend is has been down from the last 1 year. The stock is under the selling pressure through the last 1 year. Even if we check the RSI, the relative strength index on the daily charts, it's showing that the stock is under the oversold zone. We might see some pullback rally. 75 will act as a cluster supports level. So as long as it stays above 75, the pullback rally may be likely to be seen towards 90 to 95 levels. So at the current level, the view is cautious, but definitely pullback can be seen as long as it stays above 75 levels.
Okay, that's important to note. Watch out for Ashok Leyland. A pullback rally is currently underway. Meantime, let's focus in on Voltas as well. That came out with its quarterly earnings yesterday, and it was quite a decent set of numbers that the company managed to deliver in the quarter gone by. You had the overall top line growth, which came in at 1,491 crores, up 8.5%, margins at 7.7%, and the profits were down nearly 22% at 78 crore rupees. Brokerages are quite positive. HSBC has retained their buy stance. They have a target at 640, implying an FY20 PE of nearly 29 times. They believe that the earnings will grow by 18% CAGR over FY19 to 21, holding out by a good 2%. Meantime, let's talk about a PSU stock and NTPC. What are the observations here, Siddharth?
Well, most of the PSU names are one. Yesterday added huge positions, and because yesterday they corrected 0.8%, 1%, and the kind of position, and I'm talking about a tune of 25%, 30%. In fact, some of the names have added more than 60% open interest yesterday. So I didn't assign any color to it whether this was short or long. But the way today prices action is taking place, look at NTPC, it was up by 4%, now it's up by 3.2% or so. Today too there is rise of open interest around 7 to 8%. So I'm forced to believe that yesterday's open interest addition in NTPC was long, and today we are seeing fresh formation of long position and stock is doing well. Keep eye on this name.
All right, certainly an interesting move at 135. That's a solid 3% on NTPC. Well, with that, I'm afraid we're completely out of time. We got you 15 stocks on Market FataFat, but the next edition is coming up at 1:30. Thanks to all of you for joining in.